I really sucked at trading when I first started out, but over time, I started to discover things about support and resistance that I use today are the foundation of what make me a successful trader. And I want to pass on to you the 5 concepts that really make or break a support and resistance level. If you can use these concepts every time to draw your support and resistance levels, you are going to find levels that hold a lot more often, which will in turn make you a lot more profitable of a trader. These concepts can work on any time frame or any market. If you can learn to read a chart, you can learn to understand any market. You could go and trade flowers if there was a chart about flowers. Now, to start things off, I like to wait for the market to make at least 2 swings in the same area to even consider a level. If you go around just drawing random levels everywhere the market has a swing, there's no way of confirming that there's actually a good support or resistance level there. And so waiting for 2 clear bounces is the best way to find a strong level initially. And so that's one really important thing, is you want at least 2 touches in the market. Now, a huge thing when it comes to trading that a lot of people make the mistake of, and I made this mistake initially as well, is drawing too many trend lines, keeping track of too much in the market. And what I mean by that is just drawing trend lines off of every single move. And so what this does is it clutters your chart and gives you something called analysis paralysis. The whole idea of this is that if there's just so many lines on your chart like this, how do you determine where to buy and sell? How do you determine where good profitable trades are when your thought could be, oh, I should buy here, there's a support level here, but I also have a resistance level drawn here as well. What do I do? And so a massive thing that improved my trading is taking away all the little support or resistance levels and focusing on the extremes in the market. It's so easy to want to trade a lot when you're trading. It's so easy to get caught in the trap of wanting to trade a lot. But at the end of the day, taking less trades is way more effective because it's less likely for you to make mistakes and you're concentrating on the areas in the market that are more likely to have stronger moves. You're staying out of all the crazy back and forth that can be in the middle between support and resistance, and you're focusing on the more profitable areas. Something that drastically improved my trading off of support and resistance levels was treating them like zones instead of a specific level. If you're waiting for the market to bounce off of a specific line, you're gonna be waiting a long time. But if you draw support and resistance levels like a zone, you're going to be able to see a lot more potential bounces in the market because the area you're looking for the market to bounce is a lot bigger. And in reality, that's what I have seen over my years of trading, is the market is way more likely to bounce in a zone. It very rarely will go exactly to a specific price. You can even see here, we have a really nice bounce here and the market came back and pretty much touched this one perfectly here. But if we draw that more, the market broke through that level, and if you were just drawing a line, maybe you would have thought that that was a breakout of your support and it was over. And then this little bounce right here, that never even came close to your level down here. But if you draw things like a zone, you have way more ability to see that, oh, the market came into my zone here, here, and here. And of course it was in the zone down here as well. And so how I like to draw these zones is I like to see, just like before with levels, I like to see 2 bounces. And so I think this is 2 clear bounces right here. And then I just like to see where the market was kind of chopping around at that area. And then of course I want to take into account the extreme. And so I'd like to draw pretty loosely with these because, again, drawing levels or trend lines in the market is 100% up to interpretation. You do not need to be exact with your level, but the main thing is understanding where the market is. And so off of these 2 swings here, I think we have a pretty good idea that there's a support level down here. And then with that, you can say going forwards, okay, I can take a trade off of here when it shows a quick reversal and it has come down to that level, and then down here as well, and as well right here before the market really took off in this direction. And then on the flip side as well, you can do that from the highs. I think right here is 2 pretty solid reversals. The market has swung down twice. And so taking into account that high right there, and then just kind of where the market market initially reversed, I think you have two pretty clear areas where the market came up to the zone and failed off of, and then made a really big reversal down. And so that's how I like to use support and resistance. I think zones are the way to go. And even here, you can see that, well, the market broke out of the zone briefly, but it ended up failing back in. And so that's what I like to call a failed breakout. And the market, in reality, held that zone. It's okay if it breaks it by a candle or two or by a little bit of price movement, but as long as it really holds it like this, you can say that that resistance zone is holding. Again, the whole idea that we're trying to do with these levels is just understand where the extreme resistance or support levels are in the market. So we can take either shorts off of the highs and the resistance levels, or buy off the lows and find consistently strong areas where the market might reverse and give us a solid trade. That's the whole idea with sticking to these extremes, is we don't get bogged down trying to figure out where the market's going to go in the middle of this range we have right here. That is very, very hard to do, and it's just not worth your time and energy. Just focus on the extremes and you'll be a lot more profitable. Now, another added layer is something called supply and demand. You will see whole other videos that talk about this, and all it really is you're just looking for a very clear reversal off of that area. So what I mean by that is our initial sell-off that we had right here when the market was developing this resistance zone was very, very strong. If we zoom in here at these two swings, you can see that the first swing, the market had a lot of bearish bars, and then there was an attempt at a recovery, but then the market had a very big sell-off again. And so what that shows us is that there are strong sellers up here, especially when there was a really strong bullish move right here. This candle right here is really big, but the market ended up reversing that very quickly. And so I think that gives you even more confidence in saying, yeah, I think I can draw a resistance level off of these two swings that we had right here and reversals, and then going forwards as the market comes up and touches this again, looking for a reversal off of that zone. And you can see the market pretty much did that. It reversed very clearly off of that level. And then on the flip side, you can say the same thing for drawing support levels. The market had a very clear bounce off the lows here, and then when it came and touched it again, it wasn't as strong, but it had a pretty clear bounce as well. And especially with this third bounce we had off of the zone down here, it really bounced off of this zone with a lot of strength. And so the whole concept of that is that it's showing that there are a lot of people that want to buy when it gets down to this zone. And so it gives you the expectation that this is going to be an even more solid support level or resistance on the other side. And that's all we're looking for. This is much larger traders than us. They can actually move the market. And if they are wanting to buy off of an area down here, and they're going to buy every time it comes down to this area, that's probably good for us to pay attention to, because anytime it gets down to this area, well, it's likely to find strength and may end up making a larger reversal off of that support level. Now, to add another layer of confidence onto your support and resistance levels, what I like to do is actually go out to a larger time frame chart than what I'm actually trading. And so right here, we're looking at a 1 minute chart. And so zooming out to a 15-minute chart, you apply the exact same rules we went over. And so looking at where the market is right now, we are selling off into the area where the market has really bounced quite a few times. And so what I'm going to do is I'm just going to take my zone and draw a support zone off of that, kind of using these two bounces right here. And really at this point, you can say, yeah, this is pretty confirmed. The market really likes bouncing off of this area. And so now that the market's come down into this again, well, my assumption is that the market is going to bounce off of this area. You want to apply the concepts the same. And so as the market is trading, you can see it's sold off here into an area where I'd say the market has bounced off of quite a few times. And so I'm just going to draw a support zone off of that, because I think that there's likely that the market comes down here and likely finds support. We have these two initial bounces here that are pretty solid, but then also it bounced off of it 3 more times after that. And eventually this last bounce here kicked off a pretty big reversal or bullish move higher. And so it's possible that the market just comes down here, tests it one last time, and then keeps going higher. And so I think that this is a really strong area for a support and a potential bounce. But then I want to zoom in on a 1-minute chart and look for an actual entry for a trade on a 1-minute chart. And so now looking at a 1-minute chart, this is actual live recording of a trade I took off of that level. You can see a clear support level that I've drawn off of a larger time frame. And then all I'm looking for is a reason to confirm that the market is going to bounce off of that level. We always want to wait for a confirmation first, and then we want to jump in. And so that's happening right now. This green bar is rejecting that red bar. And so I jump in on a trade right there and bet that the market is going to go higher. In reality, what we want to do is we don't want to just blindly buy off of support or sell off resistance levels that we see. You need to wait for a confirmation. The market was in a really steep downtrend into this support level. And so we want to confirm and wait for the market to show that it's probably going to bounce off of that level. And so that's why I like to get my levels off of a larger time frame and then zoom in to a smaller time frame, because you can get a faster signal and a more accurate entry. And so you're not having to wait for a signal to take a lot of time, because on a larger time frame, well, the market could reverse and be all the way up here in 15 minutes, and it would just show you one big bullish candle. And that's not what I want to do, right? You want to jump in and when you spot the opportunity and get in. And so for me, I like to wait for this downtrend that the market was in to break. And so I had a pretty clear downtrend line. It broke that. And so what we had right here was the market made a flush lower. It was kind of a final attempt to keep going lower, and then it reversed that really, really fast. And so that's what these kind of two candlesticks show right here, is the market just made a quick reversal. And then I like to think of this candlestick right here, this red one, is its final attempt to go lower, is essentially push lower. This is the pullback here. If it keeps going lower here, it could just keep doing this. But if it's gonna make a pullback here and actually reverse and go higher, that's the start of an uptrend, right? A basic idea of an uptrend is it just higher highs and higher lows, and I want to jump in as soon as it shows me that. And for me, that was right here when it did that. And so this market all of a sudden just started to take off in my favor. And that's how I like to use support and resistance levels. I moved my stop to break even there, and then I start to trail it up as the market really breaks in my favor. I'm already up a ton of money on this trade, and I don't want to let the market come back and knock me out and lose a lot of my profits. And so I like to use a pretty tight trailing stop. Sure, sometimes it'll come knock me out, but in the end, the main goal is that we made a good amount of money off of these levels. And because I use a favorable risk reward, I usually go for 3 or 4 times my risk. You know, here was about my risk, and then all the way up here, if we just try and visualize that, we're getting close to 3 or 4 times my risk. And so that is a really good way to consistently profit as a trader off of extreme support and resistance levels like this, if you're going to look for reversals, because of course you're not going to be right all the time. The market is difficult to trade. We make mistakes, don't read levels properly, or the market just doesn't want to hold them. Sometimes they can fail, but if you have a solid strategy, this is the best way to profit from those levels that I have found over my trading career. And so I move my stop one last time there, and it knocks me out at about 4 times my risk. And so if you want to learn every nut and bolt about this trading strategy, check out this video right here. I go into every detail about how I find profitable trades in the market.
Oh! Winner, wow. Wow, wow, wow. Oh.